Just on Friday, July 27, 2018. This is your midday video for members of the Market Chat Subscription Services. Intraday ideas and analysis. Wanted to open up this video today to everyone. We have an interesting trading session and indeed market dynamic forming as we get close to closing out the month of July. Obviously, next week have some unfinished business in July before the month's officially over, and then into August, September, typically can be, doesn't need to be, but typically a choppy, a little bit of a rough spot for the markets. October gets a lot of, I think, gets kind of a bad rap, shall we say, because historically market crashes, plenty of them have happened in October, but it's actually September and then August in terms of the choppy seasonality. Now, again, always have an open mind. That's imperative. Every moment in the market is unique. Every market is unique. And this one is no exception as we look at the S&P 500 and daily time frame. Despite that surge we saw on Wednesday, we were skeptical of it inside the service. We moved to a full cash position a couple days ago, sold out of a China levered long into strength back on Tuesday, Wednesday. And so the issue is, where to from here? And we're seeing on a pretty strong GDP print this morning, and we're seeing off Amazon nearly doubling. I know they missed top line, but doubling the EPS estimate. We're seeing a general sell the news reaction to the market. And after such, again, context is imperative. After a prior steep and established uptrend, and we charted this for you earlier today, you have to beware when you start seeing good news sold into QQQ ETF for the top 100 stocks. All four FANG names, Facebook, Amazon, Netflix, Google, Alphabet, they've reported earnings. Apple is next week. That's what has me a little bit reticent to push the envelope because Apple is, I think, a special situation. Apple is in the Dow now. Apple is very, very significant when it comes to tech stocks, their suppliers, just the general sentiment, if you will, of how Apple does or sways tech. So that is one bit of caution, I think, to kind of mixing it up too much here with the indices and trying to call a top. We are not trying to call a major bull market top. That is almost kind of a novelty at this point. The issue is upside momentum waning? I think we can agree it is. QQQ, again, prior steep and established uptrend showing some signs of fatigue. That's all we can say here, objectively. Some signs of fatigue, 180, a little bit of a brick wall. And so would it be the worst thing in the world if we maybe filled out the chart, so to speak, into Labor Day, maybe into October, maybe into the midterm elections in early November? I don't think it'd be the worst thing in the world if we kind of did one of these deals and, again, just filled out the chart. Again, we have to keep an open mind. We've seen this script a million times the last couple of years. It looks like the perfect setup to come in. You get nice and short, and then all of a sudden something happens or nothing happens, and futures are up 1 or 2% or something like that on Sunday night, and we rinse and repeat. So, again, I think it's important to stay balanced here. But we noted inside the service that small cap weakness this morning. They had every chance. And Monday of this, or pardon me, you go back to Tuesday, pardon me, of this week, really felt like a shot across the bow with that high volume selling. I know we kind of circled back the last couple of days, but we appear to be resuming a bit lower. So small caps, any way you slice it, running into some trouble. Even the VIX, which has been remarkably quiet throughout this, due to that game of musical chairs. The VIX is starting to wake up. It's still nowhere near above 20, which is kind of that rough line in the sand. Usually coincides with backwardation in the futures boards where you'll get the VIX maybe a little more standard corrective territory where the risk of a real super spike elevates. But for now, again, some weakness here. So the reason why we're going through this analysis is to show you that cash is a powerful position. Longs, names like Nutanix, which we like a lot overall, they're coming in. And again, a lot of names look like this. Letter I reports next week. They've been a hot name, but again, earnings there. Cliffs is a name we're tracking. We still are a nice earnings winner. Let it flag out. It's not getting crushed today. That's nice to see. Names in Retail, like Restoration Hardware, we like what we're seeing here, but we're not going to force the envelope, DSW, when the market's behaving in this manner. That's really what we want to see. PTC was holding up really well, crushed today. That should be a sign to, again, tread carefully on the long side. And then the safety sectors are real defensive names. Green, Staples, utilities just back to flat, but they're relatively outperforming. Tobacco names, I think, REITs are actually red here. But again, you could see a lot of defensive names are relatively outperforming. So what's the trade? What's the actionable trade? Well, again, gold and silver, as we've been mentioning, they need to do better. I'm not so gung-ho about them. We've been laying off the action. They, despite names like Kirkland, which have been holding up well, KL, Kirkland Gold, which is a fine gold chart, and same with Goro. Unfortunately, and remember Mark noted Yamana, AUY, spiking here. I believe that's on the report, but that's not enough. We need to see better action. So I'm still kind of laying off the action there. Plenty of energy names which have been hot, like EOG. I think they have earnings coming up as well next week. A lot of them, names which have been holding up well, like Southwestern, got whacked with energy, with the earnings. So again, have to be careful there. The thing which looks like is, I think, most viable here, just picking off really, again, we want to stay methodical. Picking off really large cap, low hanging fruit kind of shorts. I'm not saying I'm leading with the banks here, but they're actually not the most low hanging fruit I see. I do think the XLF ran up into prior resistance here and makes for a good risk to reward short, not because it's a guaranteed win, but because you're wrong. Let's say above 28.50 on the XLF. You look at names like JP Morgan, overbought in a corrective tape. Goldman Sachs makes sense. I think those kinds of names, maybe Wells Fargo. So started with the banks, but I think an IBM makes sense here. Possible rollover to new lows. And then Visa, with earnings finally out of the way. Visa, such a steep multi-year uptrend. Again, you keep a tight, relatively tight stop above these highs, 143.50, 144. You're wrong above. And then if you're right, you get a potential nice corrective pullback if the broad market does go into correction. I think that's the way we want to approach it. We're still in this overall bull market, rising moving averages, which means you have to watch it if you're shorting, heavily shorted names. If you're getting too cute on the short side too soon, it can often be a recipe for disaster. I mean, I know Tesla looks weak. It is weak. It's below a declining 200-day moving average. But, do you really want to mix it up here? The CEO is capable of doing anything to upset the short sellers, to upset the whole ebb and flow of the price action. He's done it before. He could do it again. And I think that works much better when the indices are still in bull mode overall, long term, at the rising 200-day moving average like the S&P is. That's my point. In a bear market like 2008, I think you'll find these kinds of stocks like Tesla are much more helpless, right? It's futile with these maneuvers they try to do. Look, for example, at Bear Stearns and how desperate they became in their final days, and those kinds of things worked in a bull market. The ploys and the, that kind of thing, but they don't really work in a bear market. So we're not in a bear market yet overall on the indices. I want to stress that point here. We're just showing some summer fatigue heading into a seasonally rough part of the year. So again, that's an important concept. Greenbrier is a long idea we've been stalking. Want to see this thing continue to firm up. Again, have to stay balanced and not turn super bear right away. It's important, again, to kind of let these things play out, because we've seen this a million times where the selling could abate quickly. But I think you can maybe pick off, again, a couple shorts here and there. As for shorting the indices, again, you use the weekly chart for context with the Q. Keep a stop above this weekly highs, if not tighter, but above these weekly highs. You're wrong above, and you just live with the results. And again, you take the QQQ short if you're going to short it. There's S, triple Q. There's QID. Those are the two main bearish ETFs. If you do that, if you decide that's within your risk tolerance and you're going for it, again, you have to acknowledge more big earnings are coming up, like Apple, like these other guys next week and the next couple of weeks. So you just live with it, and you take you keep your stop and you honor your stop. That's the thing to do because the overall trend is still clearly higher. So this is a good market to see which names can truly hold up best, to see which names, again, can ignore the selling, remain unperturbed. And again, that to me is going to be the real test the rest of this summer. So we have a good, focused, cogent list. If the bear case does not come to fruition and we start to, again, firm back up, whether it's next week or next month or again around October or the midterms, either way, we want to have a good list of names which have survived and even thrived and set back up to go ahead and pounce on. Hope you found the video useful. Again, we do these types of videos inside Market Chess subscription services routinely. Thank you so much and enjoy your weekend.